All right, good morning, everyone. Welcome to this live SB Intraday Strategy webinar. Mike Boutros here with you this morning. We did just get the release of housing starts in the United States, slightly stronger than expected on the starts. Building permits, a little bit lackluster. Saw a contraction of 16.3%. We were looking for a build of 8.2%. A real quick segue here, guys, just to see what the dollar index is doing. Still holding above that 11,980 near-term support, and we'll be watching that level to start off this session. So we'll jump back into this trade. Good to be with you guys this morning. If you have any questions, as usual, always feel free to throw out any questions, trade setups you guys are looking at on the message board. It's been a lackluster market, to say the least, in a lot of the major crosses. And I understand the frustration when you're trying to find some setups and this thing is kind of going lateral. We just need to know where to look. I think last night was a perfect example with the Aussie Kiwi that played out really well. Sterling Key and Sterling CAD that were actually highlighted on the radar charts, haven't taken any positions on, but you saw a real strong print in UK CPI in overnight trade, this morning trade, depending on where you are, and you saw a nice pop in the sterling. Now, we're approaching some major key levels on the sterling crosses. If it does break out, we're looking right back up to the upside, okay? Remember, one of the major functions or targets for the BOE is inflation targeting. They've continued to suggest that inflation is likely to pick up and speed up towards the second part of the year. And, I was having a fun discussion with one of the other guys on the desk here. Irrespective of what the Fed is saying, nothing that the Fed is saying is actually panning out with regards to, weak energy prices being transitory, yada, 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 whereas the BOE is pretty much on the mark as far as calling the inflation. Here's what the inflation data looked like yesterday from the BOE. You saw 1 point a build on the year-on-year core, which is the main one, 1.2% versus expectations of 0.9. So certainly that kind of move in the core rate of inflation, which tends to be much more sticky, does suggest that the BOE, like we've asserted here in SB for a while, is probably alongside the Fed as one of the most hawkish central banks out there, i.e. one of the banks that has the most going for it in its ability to start normalizing monetary policy. So we'll keep that in mind here for the British pound. We'll go over those sterling crosses in a moment. Before we do, a quick relative performance on what the dollar is doing. Here's what we look like on the session. Again, British pound is going to be the top performer so far, up 0.8%. Real lackluster on the Kiwi, Yen, and CAD. Swissy does look interesting. We'll talk about that as well. Euro with a slight decline. Aussie biggest losses. Again, holding that same range again, down 0.45%. And if we have time, we'll take a look at that as well. Keep in mind, we did also get minutes from the RBA last night. Nothing really major that you'd really want to press upon. The major financials are running with the comments that financial conditions to inform policy stance, meaning, again, a wait-and-see approach, which is sort of what the Fed is doing. So as far as the RBA minutes, nothing really changed anything, but it did suggest they still remain poised and willing to do more if need be. And these minutes, you can take them and interpret them whatever way you want. At the end of the day, price action spoke. Aussie dollar continues to hold the range. Aussie Kiwi is what we've been focused on. So to jump into yesterday's intraday update, first on tap was the Aussie Key, and we talked about this yesterday in the webinar on Daily FX. Again, guys, remember Monday's webinar is a public webinar on Daily FX. We briefly went over this setup in the fact that it was coming into major resistance. If you remember on Sunday, it was on the radar charts. We didn't really want to mess with it until we saw that 2014 high day close at 112.78 give us the reversal. We got the kickback in the close as far as a reversal candle, and we're following through on the decline here today. Here's what the chart looked like last night. So you were sitting on that 50% retracement that was right at the 112 handle. Momentum was already approaching that oversold territory. Didn't really get a chance to get back in this on the initial break of that Asia opening range low, but the decline took you into the targets that we noted last night. So initially, you'd be looking for a move into 111.75, which is right there, and then 111.40, which we haven't touched yet. Still looking for a drop into that region. And if you look at this on whole, you have the median line parallel, which also comes off. You've seen that define price action pretty nicely with the highs that we made for the month early on. The pivot low that we made after we broke above it offers some near-term support right around that 786 retracement. Moving against us near term heading into the US trade session is the fact that you're seeing some divergence in price, price action with a lower low, the oscillator with a higher low. Remember, when either one of these reference points are on either side of the extreme, meaning one in oversold, one above, or one in overbought and one below, tend to be stronger signals. And you've already gotten a trigger break to the upside. So near term, the immediate focus from right now is probably for an upswing into the US trade session. And then we'll look to see if we can get any short triggers moving up again. Remember those median lines, slope lines that we've been talking about for like months? They're right back in play. Okay, the same slope line off the 2014 lows is what we've been working on with all of these ascents, even on the way back up. Really clean breaks. And as long as we hold below that near term, 1170 again comes into focus, same level as possibly a re-entry here for the short side of Aussie key. At this point, we'll also drop our bearish invalidation level back to those highs that we made yesterday. And that takes you down to 112.30. So we're dropping that from 112.50, which was on yesterday's scalp update. You drop that bearish invalidation to 112.30, keeping in mind, again, the upper median line parallel right there. Yeah, Bernard, we'll definitely take a look at Kiwi. Oh, I missed your messages there. Eileen, good morning. Premendra, great to see you guys. Kelly, Graham, Chad, great to see you. Hey, Chad, I sent you that email last night. I do apologize about the delay on that front. Let me know if you have any questions on that. Anything before we move off Aussie key? Looks pretty good. Here's what the 5-minute chart looks like heading into US trade. And again, you can also see the divergence happening here as well. Okay, higher low, price action making a lower low. Even on these lows, you're getting some divergence. So expect that upswing. You actually got just a near-term trigger that just gave way, it looks like. Tested at support. This is another trigger break here. So you could get some upswing. Not really interested in playing the the long. I'd rather be looking to see this rally find some resistance near those London highs, 111.70, maybe even that slope line that we've been following. But that's sort of the game plan moving into US trade. A downside break, again, major key support at 1140 and below. Watch that median line. And if we break below that swing low, keep in mind that swing low that we made back on the 12th comes really, really close to the close of the first month of trade here, or the first day of trade for the month. So 1090, the 11 handle, 111 is basically what you'd be looking at near term. Looks good though, guys. No change there on Aussie key. How do I get RSI2? Ooh, I didn't include that in the email, did I? It's on FX Codebase. That should be the link for you right there, Chad. I'm going to send this so that everyone has it, just in case. So guys, if you check your chat box, that's the RSI2 indicator. You can download that, the LUA for that. It just adds the 40-60 levels for you and also adds auto scaling, so you don't have to keep rescaling the RSI signature. Hope that helps, Chad. All right, moving right along. That is Aussie key. Second up on deck was dollar yen. This one's been super frustrating for me, but it's still right where we want it. Nothing's changed. Just you can't get much play in it. So the game plan here, guys, and the whole focus has been a break below, again, this darned region at 124.13. This is now 6 consecutive sessions. If you don't even, that's not even counting the dip that we made earlier in the month at an attempted break below the 124 handle. You know, on the way up, you saw divergence in momentum as price action pressed into a new high, held 60 as resistance. It's not what you want to see in a bullish market. And then he made an outside reversal right at the highs, an outside day reversal at multi-month highs. So we are still looking lower. We've continued to drop the bearish invalidation level, but here's what it looks like on the 30-minute. Again, the focus really being a close below this 124.13, 2007 high, basically. Nice pivot in price. Close highs for the previous month. There's a lot stacked up there. Here's what the intraday chart looks like. Just wait 1 sec, it'll come back. There it goes. So if anything, on the whole, it's giving you a simple weekly opening range. And as we said earlier in this in the week, we're basically looking for 124.50 resistance and the opening range break to the downside to give us the confirmation for a broader turn here in the dollar yen. You haven't really gotten it. You're still better off in any way you look at it. You've still been better off playing the short side of the trade, which is what our bias has been. And I'm sorry, on this one, we're going to continue to keep the bearish invalidation level up at 124.88. We can't drop it beyond that at this point. Near-term resistance right here, we've been pivoting on it. That's that 124.35 level that you see on the daily chart. Okay, 1618 from that December low. And then obviously the upper median line parallel and 100% extension off the low is sort of the max you would want to see this rally if we're still going to be turning over. And the idea is that we're still looking lower in dollar yen, but we need to see that concerted push and break of the weekly opening range. So, I'll be looking for short triggers again as we rally into 124.30, 124.50. If we don't get any short triggers, momentum continues to build. Look for that breakout for another rally back into the upper median line parallel. But from what the dollar index is doing, from what the yen crosses have been doing, you saw GDP out of Japan and overnight. Or rather the weekend, top expectations. You've seen them soften their approach as far as the aggressiveness that they're going to be looking to achieve that 2% inflation, saying that could come even ahead of schedule. There's a lot of dynamics here, and I don't think that the blind short yen trade is really in play right now. So that being said, we'll let price action guide us. If you see a topside break of the weekly opening range, you might be nice for a long here, but this is going to be our near-term bearish invalidation level still. All right. Keep in mind, the biggest player for U.S. economic data comes on tap tomorrow with the inflation numbers here out of the U.S. You also get the release of the Fed minutes. So dollar yen tends to react pretty strongly to U.S. economic data. We'll look for that to give us some clarity if this range holds into tomorrow. So we can't force the market, guys. It's going to give us what it's going to give us. But another one that's, one of my favorite pairs at this point alongside the Aussie Kiwi. Any questions on dollar yen? And keep in mind those support triggers. Support triggers into 60 that hold and break have offered some really nice shorts even this week. Okay, here's that one from last night. You got a nice support trigger break right into the highs, took you right into those first two targets, and again, a perfect tag of that median line. So near term, we'll be looking to do the same thing again. Maybe this will develop into a trigger as we head into US. All right. Last but not least, on the docket, just thought I'd throw this one on there real quick, was dollar CAD. We've seen this be a messy break and continuing to really mess with the bearish invalidation level, but the bias is still unchanged. So here we are, dollar CAD last night. We wanted to keep the bearish invalidation level unchanged at 131.12. You saw another brief spike right above this and a duck right back below. Here's what it looks like right now. All right, so again, really brief, broke above it right into the open of Europe trade. We came right back, and here's the spill off with another trigger break to the downside and a 60 rejection in RSI. Very similar to dollar yen in that the weekly opening range is pretty well set at this point. We'll look for a break below 30.60 to confirm. You really need to see on the daily chart another hold and close below this region. Remember, the high day close comes in at 131.76. That was what we were looking short below last week. Near term, you want to drop that bearish invalidation level again. So we're going to continue to work against this region. Just work against the highs. Don't really stress the fib at this point. The European highs, which comes in around 31.25, is what we'll continue to hold as our near-term bearish invalidation level. To be honest with you guys, I haven't really taken anything on dollar CAD this week at all yet. This breakout earlier in the week faked me out. Now that we ducked below it, I still want to look lower again, but getting kind of messy on the levels. So I'd rather sit this one out, wait for a week, a break of the weekly opening range, to give us a little bit more directional clarity on it. Keep in mind, for Canada, you got a double whammy this week, because not only do you get US CPI, but you also get Canadian CPI later in the week as well. So You got a couple of things to look out for here on the loonie. Eileen says, when you get a chance, dollar yen, why did you choose 124.80 as the invalidation point as opposed to 124.50, for example? I want to understand more how you determine those generally. Thank you. Sure. So let's go back to dollar yen real quick. And she's saying, why are we holding 124.80 instead of 124.50? Good question. The broader picture changes, right? Right, Eileen? When we're talking about bearish or bullish invalidation, it's what's going to shift the focus broader. So if I'm working under the premise that this is the slope the market is finding, this is what's going to shift my opinion. So Eileen, it doesn't mean if 124.50 breaks, you can't work with a long. You could probably get away with a couple of decent long scalps. The ATR is pretty small. You could probably get away with it. But with our broader bias weighted to the downside, looking for that break, I'd rather be looking for this rally to break to the downside. Also, Eileen, a couple of different things. In Elliott wave theory, your simple corrections, ABC, typically can be 100% extension, 2 equal legs up. So if this is just a simple correction on the onset of a larger move lower, then you'd expect 2 equal legs up to take you right into 24.88. So the confluence region there, a break above this is really what would shift my opinion back to the upside. Does that make sense, Eileen? I don't want to put my bearish invalidation level here because if that breaks out, I still would look probably to sell here maybe, right? But if this breaks, well then we're probably looking at broader resumption and all the way up into 25.70 and above. She says seems a little complex, I think you're saying. Again, all you're looking for is confluences, major confluences. So 100% extension, you're looking at this for guidance. Well, in time, they cross right around that 124.80 level. We'll use that as our bearish invalidation. Near term, you're also looking at just these slope lines off the low, a basic support line. Great. That coincides on the weekly opening range low now. So if we break below that, that'll confirm my downside bias. We got to map out these levels before markets start moving so that everything is sort of prepped and ready to go. We don't want to be thinking about where our entries are and where our targets are when we're scalping intraday, right? We're only focused on the triggers. We're only focused on what price action is doing. So Eileen, let that sink in. Let me know if you have any specific questions on it. I'd be more than happy to follow through. I'm sure there's other people in the room who have similar questions. I'm seeing the general trend of dollar yen as long rather than short. I need to sink in what you see. So Eileen, the dollar yen story is still constructive. No one's saying that this is not a constructive trade, guys. I don't think anyone could look at this trade here and say that this is a bearish trend, right? But the trends are never going to go just in one straight line, okay? And momentum is waning. We've continued to talk about that ever since the peak that we made in June. We haven't been able to break above 60. And the risk is for a pullback. And that's what the risk is that we're playing on a near-term focus with a break below that 124.13. If this doesn't break, and like I said, we invalidate the long side, we'll be right back on the longs from a scalp bias. But near term, you know, trying to play the long ever since that outside day reversal has been a tough proposition. So it's keeping the near-term focus flexible, Eileen, is the main thing. If you fall in love with a bias on any one of these pairs, whether it's swing trading or intraday trading for that matter, it can really make a mess of things. And trust me, I've seen guys who are, yeah, I used to be that guy. I fell into that dollar yen long position way back when dollar yen back from dollar yen 140, 130. And for months, I was fighting a very strong correction in the dollar yen that eventually went to 70, and it hurt, right? But the more flexible we are with near term, that's what our focus is, the better it'll be for you. So Eileen, hope that helps. Says, okay, I get it more now. Near term, RSI, momentum, etc. Right. So we're looking for these shifts. So those are the 3 setups that were highlighted on yesterday's intraday setups. Again, the favorite of the 3 being the dollar yen and the Aussie Kiwi. We'll continue to follow those. I just want to touch base real quick on the radar charts. Again, both of these trades saw pretty strong volatility. First of all, they have massive ATRs, so it's definitely something you want to keep in mind. But also on the back of that CPI data. So start off with sterling key, which was at an interesting juncture last night. Well, let me take you back to the daily first. So this was a setup I actually highlighted last week on on daily FX, and the focus was against the high day close, which came in right around 123. I'm sorry, 239.42. And that was on the account of some of the strong divergence we've been getting, some sort of CAD recovery, and also the sterling, which was butting up against resistance against a lot of its pairs. Here's what this scalp looked like last night. And we said, you know what? The break below this region really has the potential to see a much more substantiated drop. Near-term support not really coming in until 235.20, followed by 233.60. Well, you got the release of the UK CPI, stronger than expected. Kiwi saw a rough day as well, kind of lackluster. As soon as we broke right back through this key region, here we are, right back at the upper median line parallel. Okay, so doesn't change the bias. Remember, the bearish invalidation is still that high day close at 239.42, but at this point, you're checking resistance, and a break beyond this really, I mean, there's nothing above 24.20 or 242.20 rather, excuse me, until like 248. So nothing I'll be looking to scalp if we do break, but testing resistance at this point. And again, this is a reason we put it on the radar chart and not highlight it in the setups. I don't think it was quite primed yet. It's a good thing we didn't. The trigger break did give you a tell, but on the back of that UK data, I don't think anyone expected it to be quite that strong. And the implications for monetary policy from the BOE are the biggest tell here. All right, so we'll be watching for resistance out this upper median line parallel. I'm not really in anything on this one either. A quick retracement. Just let me see what this looks like. It might be just worth keeping that there and watching that 786. Again, a quarter of the daily ATR here is giving you 78 pips, so keep your wits about you on this one. Watching for resistance here. Again, short triggers. I wouldn't even be looking to jump into anything too aggressive. Maybe half leverage on this one if you do get a short trigger sub 23.80, 38.90 rather. But I'd be cautious on these wider range scalps. Yes, Andrew. Let me take a step back. Andrew's saying should we be extra cautious to take on pound cross shorts rather, given the CPI? So Andrew, I don't want to say given CPI. The CPI reaction the market has digested. That's baked. That's what caused the rally. So anything beyond here, I wouldn't attribute to the CPI reaction. So I get concerned when people say that based on CPI, because how long do you hold that bias? You're telling me on Friday you're not going to take a sterling short if we're at resistance because of Tuesday's CPI print. I don't work that way. The initial reaction has been filtered in. Market has digested it. The tell is if the broader market is going to fade the move or we've broken out. We haven't broken out yet. So the risk is you're just at resistance. You're just at resistance. Remember, none of these releases really have the tendency to change or reverse trend, guys. But they can act as a catalyst for a break of resistance or a break of support or such. We haven't gotten the break yet, and the pair is at resistance. So all things held constant, you have the same bias that we held last night, right? It's just right back at resistance. If we break this region, okay, if we move off and break through this, that'll put me on the sidelines, and a break above the high day close puts you constructive. At that point, I'll be looking to buy pullbacks. Andrew, do you see the methodology, the way you think through it? Does that make sense? Right off the bat, yeah, I'm going to need to see some pretty compelling shorts triggers and momentum. And if it does happen, it would be against the highs here. So let's say the U.S. opening range, Andrew, sets up like right here, and then you get a break to the downside. Yeah, that might be a decent scalp to the downside. It's a pretty wide range. But this near term is going to be, is going to invalidate the operative structure we've been working on if we break through. Just give you a view what that looks like. Andrew says yes. All right, cool. And the other setup from last night was the Sterling CAD setup. This is another one very similar in that, you saw consolidation, outside reversal yesterday. We were looking to stay bearish below the weekly open there. Here's what it looks like on the scalp chart from last night. And we blew right through it. We blew right through it. So we're looking for a rally here to see if we can find some short triggers, if we can find a hold here. Again, UK data plowed right through that region, and here we are right back at the opening range high for the week. So you set the opening range high just below resistance, and again, above that 205.40 level, we have to be looking higher. If you take a look at this on a broader range, let me zoom this out real quick, you can see we're even now back above the median line. So on a trade like this, I'm not even looking to take any short exposure at this point. If dollar CAD turns around and gives us an opening range break to the downside, you might see limited upside here, but much more be inclined to trade the sterling key than this at this point. So a little bit wider of a range trades, guys. Both of those, again, if they're on the radar charts, it's probably because there's upcoming data or there's something that we kind of just want to keep an eye on, not necessarily be operating on heavily. So we'll be watching this for entries maybe into the close of trade today, into the open of Asia tonight. I'll give you another update as we do the intraday update tonight. But sterling key out of these two is the one that I'm going to be focused on as far as the radar charts from last night. All right, so those are the highlighted setups that we highlighted on the site last night. I want to jump into your questions, trade setups you guys are looking at. Also take a quick look at what's going on with the greenback. So here's the dollar index to start off the session. Remembering key resistance or near-term resistance at the monthly open at 12,012. We extended just shy of that. The high was 12,009 in overnight trade. I think you can probably get another push into that as you head into US. There's that 1212 level. And a sliding parallel also. Thought that was supposed to be from there. Extending from that swing low that we made in late July. Also coincides just around that region. So we'll be watching for that as near-term resistance here for the dollar index. As a disclaimer and a quick tell here, again, it's forming up or shaping up to be a nice weekly opening range. Also, the pullback that you saw in overnight trade, momentum finding support right at 40. We'll want to see that change. We want to see a 60 hold and a 40 break for this thing to break down. Otherwise, this is still a constructive momentum signature. So looking for a tell there for the change or for a shift in near-term momentum for the greenback. Near-term resistance 12,012, backed by that upper median line parallel. So even if you're trading stateside, you can't trade the dollar index per se. We like to use it as a nice gauge of base dollar movements in its inception or from its inception, equally weighted average of the euro, Aussie, sterling, and yen. Bernard, I want to take your question there on the Kiwi dollar. Here's what Kiwi looks like. I haven't been a fan of playing Kiwi dollar or Aussie dollar, although if you put a gun to my head, I would probably still rather play Kiwi. The range is a little bit more well-defined. It has a little bit more structure on the near term. And on the breakout, I think once you finally get it, this will give you the best bang for your buck. You're looking at the monthly pivot, central pivot, which is offering some near-term resistance. Right alongside the monthly opening range high, that's like 66.30. The lows from last month holding as near-term support, essentially 65, 64.97. You saw a brief spike there, outside reversal day, and ever since that outside reversal day, which made the low on the 12th, we've been trading inside that single day's range. And that's when I like to use that day's range in and of itself as an opening range strategy. So I'll be looking for a break above 66.40 or a break below 64.60. Yes, it's a little bit over 100 or an 80 pips or whatever. It's not a big deal. I'd rather wait for that clarity. In the meantime, we can look to play just the range. You sell near resistance, you buy near support. You're looking for a quarter, a daily TR. Easy peasy. That's it. I'm not looking to position for any major swings or breakouts in the Kiwi until we get that definitive close out of this range. So here's what it looks like on the near term for Kiwi dollar, Bernard. Like I said, it does look like it has some structure off the lows. So near term, you'd be looking for a resistance right at the 618 from the decline off the high. Oh, I'm lying. Hold on. Okay, I'd still be looking for that 6650 range. Nice pivot in price, but the 618 off the decline from the high comes in at 6633 or so. Okay, and near term, I'd actually be looking for a hold of support right here. Right here. You got the lower median line parallel. You got a nice pivot in price that we've been following for some time, for a couple of weeks now. This is almost 2 full months that you've been pivoting right off that region to 65.50 or so. So I'd be looking for a support hold there and a break of the weekly opening range low. You're done. I mean, you look for this thing to get right back into the lows again, right into 65. So a little bit less conviction on this until we clear this range. It is a range trade. Any trade that you take should be taken as such. And all I can tell you is if we hold here and we see a nice reaction to the U.S. trade session to the open, it might be a tell that this could be the proper structure, the possible, slope gradient, whatever you want to call it, that the market's following. Bernard, does that help? Does that make sense? Until we get out, it's a range. Let's treat it as such, but I'd be looking for near-term support right here near 65.50. He says, thank you. You're more than welcome, sir. Moving right down your questions here. Let's see. Mark, great to see you, sir. Mark Lavender says, Michael, could you review sterling yen? Thanks, absolutely. So here's what the key sterling yen looks like, rather, on the daily. Nice outside reversal here today. You see where we reversed off of? That's the August open, guys, that you see there in magenta, 193.57. Today's low, 193.53, 52. And then we're posting an outside day reversal out of it. I would like to see this thing close above the range highs for the month. If anything, Mark, it would be a simple opening range trade break, and that would give you targets into 195.80 and up into 197.22. It would be really good if you clear 60 on the momentum break alongside that as well. Let me see what it looks like on the 30-minute. All right, so this is my first look at it this week. Here's your weekly open. Okay, this structure is no longer in play. Yeah, you're looking to check the range highs right here. I wouldn't do anything right here, Mark, but it is at resistance. It is at resistance. I'm favoring a topside break just on the count of the broader strength that we've seen. You could see some kickback here. I'd possibly look for some support right in your 94.50 near term. But, geez, if this thing pops, there's a lot of room to the upside. And I would want to see a break above 60 in momentum and a push through the opening range high for the month. It would be beautiful. I think that would be a very, very nice tell. Keep in mind, again, this specific pair has been doing beautifully with the opening range. And that's one thing that we want to talk about real quick, guys, is that when we're talking about I was up and bought it at 195, 193.58. Yahoo says Kelly, 193.50. Wow. Kelly, you literally caught it right at the monthly open. That's the ideal scenario. So well done on that. Make sure you manage that position and manage it accordingly on whether you're looking to take that as a longer range trade or whether it's intraday. Okay, so I just want to put that out there. But one thing I did One thing I did want to note real quick is that when we're talking about opening ranges, it's not a blanket statement, right? So when you look at some pairs, they will perform much better with the opening range strategy than others. So anytime I'm looking at a pair and I tell you guys I'm looking for the opening range break, it's because I've looked back and price action has performed pretty well with that strategy over the last couple of months. And with the same respect, a pair that works well with a monthly opening range might not continue to do that for some time. And so we want to take that into account, whether that strategy is being respected in time. Last month was a complete wash because you had some huge range fluctuations on both sterling and yen volatility. But if you look before that, opening range break for March, you saw a break here late in the month, closed at the lows. Opening range for April, saw a break on the 22nd, closed near the highs. Initial opening range for May broke really early on, or in the 10th or 11th was the day that you'd actually confirm that, closed near the highs, and so forth. So, this has set up, and now we've tested this region for like 4 days now, right, this month. So I would really be stressing a break of this. I would really want to see a 60 break in momentum, and if it does, you have a lot of upside room. We could get a whole lot here of more sideways action. Keep that in mind. So if you're holding a decent gain like Kelly says, I did, thanks, I'm salivating. Again, if you have multiple lots on the position, Kelly, this is where I'd be looking to clean up my book a little bit, bring your risk in, but you have ideal entry, ideal. That was a huge region of support, and not just that, it's a 50% retracement of that rally off the lows from the month. So you basically took the entire monthly range, split it in half, came into the open /50%, momentum showing divergence into that low. You had a pretty strong trigger break to the upside. Beautiful play, Kelly. Well done. And there's the result. Obviously, some UK CPI data also give you a little bit of a nudge there, but all the hallmarks were there. So let's see what sterling yen does. Watch for resistance here. Again, you could get some kickback off this region. Broadly speaking, look to remain constructive above 94.50. So Mark, hope that helps on sterling yen. Let me know if you have any other specific questions on that I can address. Mark Haverman's great to see you, sir. Says Aussie CAD breakdown question mark. Let's take a look. Well, I'd say it's a break of sorts. So you're back below the 200-day moving average. Let's take a look at near term for this. Mark Lavender says, that's great. Thanks. Hey, you're more than welcome. Always good to see you in the room, man. Aussie CAD on the 30-minute looks like this. Looks like I did update this at some point this week. I wouldn't say full-on breakdown just yet. You are seeing lower highs and lower lows. I see what you're looking at there. Just give me 1 second. Scope this out real quick. Oh, wow, look where the 618 comes out. So all indications point to a little bit more of a decline in my personal opinion. It would certainly pan out really well with what we're seeing in relative performance, what with the Aussie being the biggest loser on the session, expected pullback in dollar CAD. There looks like it could be a decent play into this key region here. I'll bring your attention to the 618 off the low, the 618 off the high, also the median line. Well, actually, I didn't snap this. Let me see if this is correct here. Yeah, it is. So I can't say it's a full-on breakdown just yet. He says, yeah, I'm watching that fork too now too. It looks pretty decent. It looks pretty decent. So if you look at those highs that we made towards the opening range for August, the pivot break on where we broke out into that rally, That median line, like I said, comes in with all these right here. And I think if you look at the momentum signature, it's pretty clear that you're in a downtrend. So ever since the peak that you made there on Friday, you saw some divergence being made into the highs as price action continued to press into new highs. The oscillator continued to make lower highs. Hold at 16 to the open of the week, and here's your sub 40 prints. So it looks pretty good. I would be looking to sell rallies below that median line, to be quite frank with you. Maybe somewhere near 93, 96.30 or so. The only thing I do want to note is that the ATR is pretty tight here, while the ranges are a little bit larger than I would like. But just keep that in mind. You're looking at about 100 pips per day on the average range there. But I like it. I like the initial move that we're seeing here. From a daily prospect, it's a messy trade because you got all these pretty long wicked wicks. But even on the rally here, since the peak that you made in January, it's been a very prolonged stretch of between 40, 60 prints. So if you get back below 50 in momentum, look where that 100-day moving average is. Comes in right around 95.50. That's the same region we just highlighted, or just above it. But you get the picture. Mark Haverman says, yes, I'm not in, but want to get in short. Thanks. Yeah, more than welcome. I think the near term, we're on the right track with this one, Mark. Just know, again, that the Aussie dollar. Well, let's jump into Aussie dollar. We went over the Kiwi, and I like the Kiwi better than the Aussie. But if we look at the Aussie dollar, this thing which held for 4 months granted us no plays. And that's when I start to get a little bit concerned, especially when you have long-term structures that span over multiple months. The break should produce. It should produce. If it doesn't, you're either looking at the wrong structure, we're not following the proper glide or slope, or the market is still stuck in a range and it doesn't matter. So I don't know what to think with this. If anything, again, it does have a very similar opening range setup for the month like Kiwi, not quite as well defined, not quite well as support, but that's what I'd be looking at. The monthly open comes in at 73.15, and I would be looking for that for near-term support as a possible pivot. Here's what it looks like on the 30-minute. Again, so a possible structure or a probable structure here off the lows is what I was trying to work under the assumption of. It gives us near-term technical support near 72.80, a little bit lower. Remember last week, the whole level that we were working against was 73. That was the bullish invalidation level. So we broke back below that early in the week. It was like Tuesday, Wednesday that we broke below it, spilled into a new low. Once we cleared back above it, it looked constructive again, but here we are holding more of a lateral pattern. Pull back here. That would be the key support I'd be looking at. Near term, where you look for some from long triggers. If you don't get it in that region, I'm back in the side of completely lost on the Aussie dollar. So, part of trading, guys, is recognizing where the clarity is, recognizing where the setups are, and standing clear of things where you might not have a strong opinion and not try to force a trade. So, for the Aussie, I think you take them a little bit more of a wait and see approach. If you really feel compelled, the Aussie crosses might be a little bit better of a play. Sterling Oz, I know that Jamie's looking at that. Was something that we've both been looking at for quite some time. Dollar, kind of tired here. Kind of tired here. Mark Haverman says, "Arg, yes, don't get stuck on a particular pair. Very hard. Yeah, I mean, there's something called revenge trading where you get into a position, especially for near-term traders, it's very common. You get stopped out, you still have a really strong opinion, then you jump back in, you get stopped out again. Yeah, we're never going to condone that kind of behavior, right? Now, that's not to say that you can't trust your analysis, and if you get stopped out and you get a better opportunity and a better level to get in, you shouldn't take it. But every trade needs to be taken on its own merits, irrespective of what the previous trade did. That has nothing to do with it. So if the market is not following the analysis that you're producing, or if the market's not giving you the conviction at reaction levels, then you simply move on to where it is. And we have those pairs set up and highlighted. We don't want to press something that's not as clear. So those are the major levels. A quick turnabout on some of the CFDs and just some of the majors that we're looking at over there. Here's what the SPX looks like, guys. We're testing resistance today. We came into it the upper median line parallel from the decline off the highs for the year. The spill that you made last week, interesting region. I just wanted to highlight this yesterday. I forgot to do it in the webinar, where we bottomed. You know, it overshot it by a little bit into 2050, but this is a 50% retracement of the 2015 range. So the 2015 low and the 2015 high, and the median line off the highs was right there as well. So look for near-term resistance here. If we break the opening range high for the month, comes in at 211 or 2,113, and that will be the breakout. That would put you at a target right back at trendline resistance off the highs. Momentum has given you a little bit of a trigger break here. Price has not. This is not an operable move. So this really means nothing right now. So quick look at the SPX. German 30. Who was in this? Bernard, was that you, I think? Sharif says, check out the inability to close below the 200-day moving average. And what pair is that, Sharif? On the SPX, you're absolutely right. You're absolutely right. You see how many times we bobbled against that. Doesn't necessarily mean that we'll see the topside break, but certainly does mean that the markets are watching that 200-day moving average with a lot of interest. So I just wanted to go over this as well. This is a trade that we went over last week. I think it was Bernard or someone in the room was in a short somewhere around that 11,500 level. Well, the initial target 11,013 and 11,092 got taken out last week. This is a key support near term. 7.6 off the low, 100% extension off the high, and both of those coincide right around 10,890, 10,920. And you're seeing that the last 4 days you've seen some spikes into that region. So near-term support here for the DAX. You also have support in momentum. A break further down, got a nice ride down to 10,650. Bernard says, yes, was a great win for me. Well done, Bernard. Yeah, I thought of you as soon as I saw this pair, or as soon as I looked at this index this morning. So absolutely, look for near-term support here. Wouldn't be surprised to see a rebound. I'd look for re-entry possibly near the upper median line parallel, possibly near the weekly opening range high. But I just wanted to highlight that near-term support. Watch it there for the DAX. The other thing I want to just look at real quick, I don't have much to say on it, is crude. Don't try calling a low on this, guys. Let it pan out. And like I said, once we get back above the lower median line parallel, now resistance, we could start talking about some sort of near-term reversal. But there's been too many people trying to call lows on this, and I'm not really interested in participating in that behavior. Gold, the upswing probably has more to go. It did stall out a little bit. Here's what it looks like on the daily. Again, we'll have to see if the dollar gives us a little bit more of kickback too to help this out, but gold trade remains constructive near term above 1100. So even if you get a pullback, you're looking for resistance near 1140, 1155 being the invalidation level for the bearish trade. We're not looking for it to get invalidated, but that would be the major resistance on gold. All right, last but not least, I had it jotted down here for some reason. I think we talked about it in the webinar on Thursday of last week's session, but dollar Swiss, the reaction that we got right at that region that we were looking at last week was ridiculous. So it had a huge range into the close of last week, 98.77, 99.12, major key resistance. You also had the median line off the low in that region, and you reversed right back below. The only thing I wanted to highlight here is major key support, and that comes in at 96.50. Okay, that's the monthly open, the lower median line parallel, and pretty darn close to the open, or it is the opening range low for the month as well. So that would be the sort of break that would suggest a much larger correction. Dollar Swiss has been calling dollar price action in general pretty accurately. It was actually Jamie who pointed that out to me. So we want to keep that in mind here, and now we'll be looking for another further validation for some sort of near-term turn in the greenback. All right, so a lot to digest. Hopefully we'll get some more play on this. Remember, tomorrow's CPI print, so we'll be live during the webinar here to release that at 8:30 Eastern. And again, we'll give you an update later tonight for the intraday trades. If there are no other questions, guys, we'll wrap it up here. Again, we'll see you tomorrow morning at 8:30 Eastern. Best of luck trading. We'll see you then. Cheers.